This week's episode is all about ensuring and retaining the value of your supply chain. Flexibility and resilience. Those are the watchwords, especially in these challenging times. And to help us out, we are talking to Professor John Cullen and Professor Lisa Jack about how we navigate uncertain times. What are the tools and the technologies that can help your business with things like process improvement, logistics, scenario planning, and supply chain management. Welcome to the Go Beyond Disruption podcast. It's brought to you by the Association of International Certified Professional Accountants. That's the unified voice of the AICPA and CIMA. My name is Kyle Hannon. I'm based in the AICPA and CIMA office in London, UK. Every week, we share insights from inside the accounting and finance profession that help you stay ahead of the curve, whatever business you're in. So you don't have to be an accounting or finance professional to get value from our weekly podcasts. Our guests are Professor Lisa Jack and Professor John Cullen. Lisa is a professor of accounting based at the University of Portsmouth here in the UK, and John is Professor of Management Accounting from Sheffield University's Management School. Welcome to you both. Professor Cullen, where are you joining us from today?
Joining from Sheffield. In this coronavirus episode, I'm actually phoning from home.
No place like it, I hear. And Professor Lisa Jack, I would imagine that you're in Portsmouth?
Yes, I'm in Portsmouth, and again, I'm phoning from my home office in Portsmouth.
I know there are several Portsmouths throughout the world, but this is obviously the original. What's it most famous for?
Well, it's most famous for its historic dockyards. Henry VIII sent Mary Rose out from here, where it's sunk in the harbour, and you can now go and see that down at the historic dockyard. We have Nelson's Victory and we have the Warrior. The D-Day landings, this is one of the key places that the men set off from, the US, Canadian and British troops. And just across the road from where I live, Charles Dickens was born.
Magnificent. And also, I believe, talking of just across the water, is, I think, one of the world's only submarine museums. And I don't know if Sheffield has the same prestige, but perhaps we just need to hear more about it. Professor John Cullen, tell us a little bit about what happens in Sheffield. What's it known for?
Yes, well, traditionally Sheffield has been known for its steel industry. So across the world, Sheffield is famous for steel. Sheffield is famous for its cutlery industry. If people are viewing films, it's famous for the setting of the Full Monty, which I know has been shown around the world. It's got a couple of football teams, one very good, which is Sheffield United, and one not so good, which is Sheffield Wednesday. But it's a very vibrant city, 2 universities, international, often known as the biggest village in the country.
Well, now we know where you are. Let's talk about how you got there. You are both academics. You're professors of accounting and professors of management accounting, but you do come from a world beyond academia. Professor Lisa Jack, how did you start your career? You came from practice, didn't you?
I did. I was an auditor. I got my ACCA exams and worked as an auditor both in the private sector and in the public sector over 10 years. Following that, I took a teaching position, and about 3 or 4 years into the teaching, I decided to do a PhD. So I was a very mature PhD student. Because at that time I happened to be working in a land-based college, my thesis was on agricultural accounting. I got my PhD in 2004. And from there, I did get a research and teaching post, first at the University of Essex, and then moved on to become Professor of Accounting at the University of Portsmouth about 10 years ago. So my background was very much in systems audit, I think, would be fair enough to say. So actually not that big a transition into academic life and looking at accounting systems and management accounting.
Professor John Cullen, where did everything begin for you?
I got qualified through CIMA. I then joined, as mentioned previously, Sheffield is famous for steel, so I joined a steel company. Worked at that steel company for, I can't think now, 3 or 4 years in the finance department. And then got an opportunity to join a glass container company across in Doncaster, which again is in South Yorkshire. I actually worked started off in the kind of accounting department, rose fairly rapidly, and was very fortunate in the sense that the company, which was Rockware Glass at the time, the company actually did the decentralization bit. And so I actually worked in the biggest glass container factory in Europe. I became the financial controller for that part of the business. After a few years doing that, 4 or 5 years, I decided I wanted to have a change. So I actually moved across to be the commercial manager, again, for that organization, both at a strategic key top level within the organization. And that was really interesting because when I was the commercial manager, I was responsible for procurement, transport, many of the things we're going to talk about today. And as financial controller, I was obviously responsible for the accounting functions at a kind of senior level within that organization. I decided then to go into academia, and initially started off at Sheffield City Polytechnic, as was. Developed from joining the Polytechnic to becoming a professor there, and then moved to Sheffield University Management School in 2005, where I still am.
Both you and Lisa have collaborated with CIMA through our academic research program. And for anyone who wants links to that, we'll obviously have the links in the show notes to this episode. But if you want to go searching, cimaglobal.com/research is where you would find more of the work that has brought them together. And that's what brings us together for this edition of the podcast, where we're talking about navigating in uncertain times. We're talking about supply chain flexibility and resilience. And those are definitely watchwords at the moment, because this podcast being recorded just at the beginning of May 2020, we are still in almost global lockdown because of the coronavirus pandemic. But the issues we're talking about have been important. The processes have been the subject of much interest and much development for decades. While the coronavirus disruption is not permanent, it is still a very critical test of an organization's resilience. And getting through it now means that organization is likely to be a better place to last, to be stronger in the long term. So if you're listening to this podcast in 2021 or 2022, long after the pandemic has just become a memory, of course, the content and the advice, the suggestions and the recommendations, perhaps from the research that we will be talking about today, will still be valid then. So, Professor Cullen, why is supply chain resilience so important right now?
Right now, if you look at the kind of issues that have been facing the world, it's one of where there's been a shortage of many products. So actually, the ability of we live in a very global society, and the ability to meet all global needs relies virtually on good supply chains. And what's happened really is that the supply chains have kind of broken down, because there's been a move towards building very lean supply chains to be more economic, more globally based, and many countries introduce restrictions, etc. There's not the free flow of goods that we traditionally have, and that has become, with the COVID-19 situation, that's become really a problem. So people who'd never heard of supply chain in the UK, if you listen to the news every day, it's talking about supply chain. Interestingly, and again, I know this is a global issue, shortages of PPE. One kind of misunderstanding, I think, is that here in the UK, I heard head of one of the physicians' societies talking the other day, and he was actually saying that there's government talk very much about the fact that that we're expecting a delivery from a certain country, but the problem is, it may get into the UK, but actually the supply chain doesn't finish there. The supply chain basically has to get, so it's from the product to the consumer. So in this case, the medics. And what happens is it's the whole supply chain, and actually it needs to get to the end user. And in many cases, the PPE example has shown the problem that it's, the supply chain has to work the whole way from the producer to the consumer to the end user. And this is what has broken down, I think, during this particular period. And the problems around hospitals in the UK, but equally supply problems for the supermarkets, is because there's been disruption in the supply chain.
So when people are talking about the headlines about does stuff arrive, doesn't it arrive, is it going to be where they need it or isn't it? The whole foundational importance of supply chains, even though it's hardly ever the phrase that we see used in headlines, they always talk about the results and the consequences. Professor Lisa Jack, tell us a little bit about the technologies and the tools that would normally be part of any typical supply chain when we're talking about things like lean systems or just-in-time delivery. Those are catchphrases which describe something that a whole bunch of technology actually delivers. So what are the technologies that ensure the supply chains do work?
That's quite actually a large question. What you need these days are very integrated systems that map everything from the inventory and the logistics. You've got all the finance systems. They're all computerized. But increasingly, we have cloud-based systems. And the work we've done has been largely around online shopping and the returns from online shopping, which has grown to be quite a significant problem. And one thing we did find is that, particularly in retail, as opposed to manufacturing, the systems are really quite fragmented. So you may have your logistics running on one computer system, your finance running on another. You may have the online system on yet a third system. Ideally, perhaps if you're running an enterprise resource planning system like SAP, you would have some level of integration of this. But of course, we keep bolting things like online onto our supply chains. And there's quite a task to make sure all these systems talk to each other. So there's some very sophisticated systems out there. The key thing is about whether they talk to each other. And for managing the supply chain, it's actually how you're managing that data. So there's quite a lot of underlying issues, a bit like John said with the supply chain itself and its mechanisms being under the radar. It's the data management and the business intelligence you get out that's vital to a good running of the system. It's great communication as always, but it goes under the radar. I think that's the key thing I'd like to say. There's obviously potential for different technologies in the future, but that's maybe a question we could get on to when we've covered a bit more of the basics there.
I think that's a great point because the modernization of, as you say, online delivery seems to boil down to a button appearing on our phones or on our computers, which when we hit order, the work is done. As if by magic, something's going to arrive, something's going to happen, something's going to be waiting for me to collect somewhere. But of course, the easy bit is just what lies at the tip of my finger when I'm making the order. It's the technologies, those interoperabilities of all of those different systems, as you said, the bolting on of this and that and the other thing that makes complexity almost unimaginably difficult to keep track of and to turn into something effective. And perhaps that's where finance and accounting mindsets help. I'll ask Professor John Cullen about this one. Why is it that accounting or finance professionals have a particularly useful part to play in understanding or in helping make these supply chain improvements more effective?
Yeah, I think accounting and finance professionals are vital here. Again, my background, I say I worked in industry and supply chain issues as looking after transport and procurement as well as finance. one of the biggest problems, I think, sometimes it can be that, finance is seen to be outside of that kind of loop, but it's actually critical. And going back as far as 1997, I actually did some research, which was with colleagues. It was at Sheffield Hallam University at the time. And we actually were funded by CIMA, and we looked at supply chain accounting and the value of supply chain accounting within and across organizations. Basically, many of the tools that we talk about, things like open book accounting, I mean, collaboration has been crucial. And one of the issues I think that's becoming more to the fore and will be more important in the future is the notion of collaboration, of relational relationships. And if we're into those kind of relationships across the supply chain, across organizations, we need to be looking at where we can create value, through looking at cost structures across the organizations. I've seen many examples in the research that I've undertaken with colleagues of where there's things being done twice within the supply chain. And unless you start to look at the basics around the supply chain, you don't actually realize that those things are happening. And if people are handling things twice when it only needs to be handled once, accounting can be used to actually highlight some of the practices that don't add value, don't create value for the end user. So open book accounting is really quite important. Things like quality costing. Quality costing has been around for many, many years. But actually, it's really important in terms of looking at supply chains. If we look at quality costing, we're looking at prevention, we're looking at avoidance, we're looking at failure costs. And if we can actually bring those into the debate with cross-functional teams in and across organizations, we can start to pinpoint, highlight areas which are really not adding value, not creating value in the supply chain. So accounting and finance play really crucial parts. And just to give you a good example, Lisa mentioned work on returns. We're returns in the retail sector. I'm involved with other colleagues looking at returns in the retail sector. And we actually, when we started off, we were looking at cost and performance measurement as part of the tools, and we were working with logistics managers, etc. And they all talked about the importance of having these key performance indicators, actually using those as a key part of the analytics, which is a real crucial word at the moment within supply chains. It was important to have those measures because they helped drive the organization, helped look at what needed to be improved, what needed to be improved in terms of customer experience. And accountants need to be involved in that process. It's not separate to other functional parts of the organisation. We need to see it as a whole, not as individual silos.
Professor Lisa Jack, in your work at Portsmouth University, what does the research tell you about what is going on behind the scenes? What's really creating bottlenecks or gumming up the works where most people simply would never be aware of a problem existing? Because as John's been saying, there are things going on almost invisibly, and you yourself have said that there's so much complexity there. Where would you say the invisible bottlenecks are? If there was for example, an accounting or finance professional that was going to be evaluating a process, what are the first things that they would find need to be improved and the changes that need to be made?
In our project, which was to look at buy online, return in store, hopefully we'll get back to that one day. At the moment, it's buy online and return through the post. But we were looking for what it costs. So we were working with the ECR Community Shrink On-Shelf Availability Group. This is an international consortium that consists of loss managers from major retail companies and from manufacturing. And so we were able to get access to some pretty large systems. And there were two things that stood out. The first is that accounting was very much part of the process. But some of the bottlenecks occurred because there were reconciliations to be done between refunds received, goods received, and customer accounts. Now, hopefully that would all work smoothly, but of course some people allowed guest checkout And if you have a guest checkout, you don't have an account you can easily go to. And so we were finding that the accounting staff were spending quite a lot of time every week reconciling refunds, goodwill payments, card charges, items. And underneath that, there was a bit of data mining having to go on because, unfortunately, there is a certain amount of fraud that always goes on with customer refunds. And, of course, digging into that takes time. So you've got at least a couple of people involved there. The other key thing we found, though, and this was really a crucial part of our research for which we developed a model, was to work out what the cost of returns was for a business. And we found it's actually far more complicated. There are very few businesses that would say they have a real handle on what it actually costs them to take a return from a customer. In the past, it's always been written off as the cost of doing business. But the explosion on online returns, and just reflects the explosion in online shopping, means that you really need to have a cost on this, and we're finding it's far higher than you would expect. It can be as much as $10 or $11 for a particular batch of items. But the cost of a return could be that much, and it wouldn't take too much to see that if your cost returns rate goes up to, say, 35-40%, you're starting to make real inroads into your net profit.
This is something that most people don't realize. When we think of things like supply chains, we always think, well, that's going to go from manufacturer to supplier to retail to me, the consumer. And that's where it stops. But what you've just said is that there's a massively underappreciated part of a supply chain, the realities of supply chains. And that's when things start going back in the other direction. Is that what I'm hearing you say?
Absolutely. And just to give you a couple of figures, when we have bricks and mortar stores, returns are around 8 to 10% on average. With e-commerce, they're about 20%. Take it up to luxury goods or take it up to Black Friday, for example, it's going to go up to 40, 50%. We even found 70% in one German organization for clothing. There's all sorts of things going on. People buy items, they buy different sizes, try them on, and then they make some returns. That's fair enough. That's how we've set up the shopping. But there's also people who will just buy the clothes, wear them, and just send them back again. It's got a huge cost, particularly if you're going to offer free delivery and free returns. That's what we really dug into, and that's where we found the really fragmentary systems were being a hindrance, and where the accountants were really going to be called in to try and help design new ways of capturing the data and working out those costs.
That's amazing. I would have had no idea that supply chains could actually move in two different directions. And those additional costs, of course, means that you've got to then figure out how you're going to account not only physically, how to cope with the stuff coming back to the factory, coming back to the supplier, but what you do on the balance sheet. I mean, that is quite something. That, I suppose, involves many different teams doing many different things. And that goes back to something that John mentioned earlier, cross-functional teams. What exactly are those typically in this scenario, and how could they work better together?
Can I just pick up on one thing Lisa said? I think, interestingly, with this COVID-19 situation at the moment, and again, I think this will happen across the world. I know in the UK, the thought is of how do people start to go back into shops to buy goods. And if we talk about fashion items, dresses, etc., there is the view at the moment that even if some shops are opened with kind of social distancing, etc., that people won't be able to try goods on in the store, and therefore actually some of the numbers that Lisa mentioned with regard to returns will actually be higher again for bricks and mortar again, because they won't be able to try things in the store. So that was just a comment on what Lisa said. Cross-functional teams, I think, are crucial. We've been doing some work with a high-profile large organisation here in the UK, and we actually worked with a cross-functional team. So in that team, you had representatives from buying, from logistics, from design, from the accountants, from supply chains. It's across the board, because one of the things that you need to understand, and again, we were looking at the reverse logistics processes. One of the big drivers of returns is in fact, one is the design of the product. One might be the buyer. The buyers are quite crucial in this, where they get the product from. And actually, traditionally, sometimes the cost of reverse logistics or returns, we've just looked at the actual returns operation of the organization, just literally the logistics bit. And that in no way covers how we can improve the processes to make sure, A, in the first place, that the customer's happy with the product, and B, in the second place, if they're not happy with the product, that they can actually return it to the store, and then the store itself can actually deal with the producer. And therefore, if we have a cross-functional team, and what we did is use the toolkit, we had a cross-functional team doing a diagnostic, we had people throwing ideas around between them. Oh yes, if we did this. I mean, if you buy a product online, you can now get, videos of the product, you can get sizing, you can see the product even online. And so it's crucial that we have the whole team who are involved in the reverse logistics process. I mean, interestingly now, in the world of social media, if somebody's unhappy with a product, they'll actually put it on Twitter, on Facebook, or whatever. So actually, we also need to involve those people, people in communications within an organization as part of this cross-functional team. So I'd say it's absolutely vital, and it's absolutely vital that accounting and finance actually work with that team, with that cross-functional team, and are a key part of that cross-functional team.
Lisa, Jack, talk to us about the role of business partners, because if we continue this conversation about accountants and finance professionals and how they can help things work more smoothly to support logistics or supply chain clients, how would you say these accountants can help things go a little more smoothly, perhaps between operations teams and strategic teams, or perhaps work as business partners rather than as people simply measuring clicks and numbers?
I think there's two ways I would pick out. One of those ways is quite simply, and this is actually backed up with some research that SEMA has done in the past on the role of business partners, is actually they're part of the design of the system. They're part of the design of new computer systems and of new information systems. So I would say that one of the key ways they can be involved is to actually help to start integrating these fragmented systems and identify the information that you really need and when you need it. So it's the role of a management accountant, but when you become more of a business partner, it's about listening to everybody and working out and working with the IT people to design those systems. And I would say the other side of that is to actually communicate, to be part of the interpreting the data that's coming through and reporting that and monitoring it, putting it into graphics and other forms of communication that are understood by people who are not numbers people primarily, or who are in marketing, finding ways of showing how the impacts of decisions made in one sector have an impact on the bottom line of the business and on the work of other parts. That was one thing that came across a lot when we spoke to lost managers.
We often talk about technologies like RPA, robotic process automation. We'll talk about blockchain, which is something which we're often seeing used in supply chain management, trackability, accountability, and we're seeing so many of these technologies discussed in the context of how they can support various industries, for example, making things work together more smoothly. You talked about different systems being bolted together, the importance of APIs. And would you say that there are technologies that are certainly more suited for this kind of thing? I know that, for example, I mentioned process automation. Is that something which you think is already being used effectively, or are there still big opportunities ahead for things to be implemented better with one of these technologies?
I think we're still at the infancy of most of the technologies. I think the automation Yes, that is happening with, some of the processing of the data online, of the orders and of the invoices coming through. I think, again, blockchain has a role, but I think the issues for me are not so much about what the technology can do. It's about building up the management controls and the communication systems around them. And people sometimes rush into the technology. And again, it does save time. You can cut down the number of steps in processing those transactions. We know always that if you have fewer steps in processing transactions, you're going to lower the cost of that transaction. But quite often where things fall down are about the legal requirements or the controls or the reports that you're going to put out. So I think, again, it comes back to the business partner as being there to help not only design what's in the box, but also what's around it. And I think also when you start auditing these systems, it's about what's around the box as well as what's in it. That's a very good auditing phrase that was drummed into me back in the 1980s when I was training.
I just wanted to remind our listeners that we'll be continuing this conversation in a minute. If you've heard anything that you would like to explore further, you'll have links in the show notes to this episode. We are talking about supply chain flexibility and resilience. And of course, what we are doing is having these types of discussions every week. You are listening to the Go Beyond Disruption podcast. You can find out more about us at gobeyonddisruption.com. And remember, you can subscribe to these podcasts. They come out every week, and you can get them on Spotify. You can get them on Apple Podcasts, Google Podcasts, absolutely free. Get them automatically. Just look for them online. Search for Go Beyond Disruption podcast. Hit the subscribe button or follow us on Spotify, and you'll get the episodes as they come out. There'll be a new one every week. And in fact, we are over 100 episodes in, and we're talking about things like human intelligence as well as disruptive technologies. Now, putting those two together is what we're doing here. My guests are Professors John Cullen and Lisa Jack, and we are talking about supply chains and how do we make them more resilient. And especially in this era of the coronavirus pandemic, stuff is not turning up where we most need it. And sometimes we don't understand why. The issues really are beyond the headlines. John Cullen, we were talking about accounting and finance professionals being business partners, fulfilling a different role, moving away from the transactional, perhaps to the relational. But these days, do you think that we're moving too much toward the transactional, because everything is being measured in clicks in terms of how much it costs to send something out and then to accommodate the costs of having it sent back to us? What do we need to do to balance those relational interactions between the people versus the transactional interactions? Do you think there's a permanent change happening? What does your research show?
The notion of collaboration of relational relationships is quite vital. Interestingly, I was looking at the press this week with regard to the coronavirus, and there was an article in one of the broadsheets here in the UK, which said that more than 90% of Fortune 1000 companies have second-tier suppliers in Wuhan, but they had very little or no interaction with them. And the trouble is that if there's not that interaction with suppliers, if you don't actually know the suppliers, and it is a very transactional relationship, that's where problems can exist. And in fact, as shown now, rather than being lean, supply chains become fragmented. They're not resilient enough. So I think collaboration, relational relationships is absolutely crucial. So if we look at relational relationships, we can be looking at working together. So suppliers, customers, in business to business are actually working together. And many years ago, I did some research again with other colleagues where we looked at two companies in the automotive sector. And what was happening there was that there was no real collaboration between them. The systems didn't work between them. And what we actually found was that there were processes going on which were being doubled up. I mentioned this already. So that was incurring cost in the supply chain without any benefit to the end user. So actually, if you get more collaborative relationships, you can start to work with suppliers through the supply chain, not just first-tier suppliers, second-tier suppliers, third-tier suppliers. And again, in some of the past, and Lisa knows a bit more about this than I do, but in some of the food areas, there's been, scandals where the supply chain, because it's not really been that collaborative, things have been happening, and the food elements of the food were not as expected. So I think transactional relationships have kind of come to the fore because of the need to reduce costs, but they've not reduced costs. They've actually incurred increased costs because of some of the problems that they've caused. So accept that there may be a mix of relational and transaction, but I see going forwards that this COVID-19 problems will lead to more relational relationships, more collaborative efforts in the future. I mean, there's some great examples at the moment of collaborations. And there's one today in the press about AstraZeneca and Oxford University working together in terms of developing a vaccine. So that's an example of a company and a university getting together. But I think, it's absolutely vital that we get more relational relationships going on, and accountants need then to be, the analytics need to support the relationship rather than focusing purely on being as cheap as possible. It's again about customer experience.
And accountants and finance professionals would identify waypoints, route markers, perhaps certain milestones as they help their clients navigate this situation, don't they? They always like to identify targets, see how well we're doing, and then report on it. So what are those waypoints that can tell us how we're doing? Perhaps, Professor Lisa Jack, this question's for you. I mean, if you look at your research, when does a route marker, perhaps a milestone, a key point in an action plan, for example, when does that show that an action becomes most urgent? What do we need to look for which tells a company that they should actually stop doing all this planning and actually start converting that into action?
I think that really happened during the course of our research. When we started, people were starting to get concerned about the rate of returns going up and that it might have an additional cost. But as the research progressed, this became more and more apparent to companies. And so I'll give you one example. We looked at 100 policies, 100 returns policies across companies in Europe. And then we've recently reviewed them again, and we're in the process of looking at them once again, because one thing that happened was that suddenly becoming aware that there was this greater impact of returns, that more goods were coming back into inventory, that the cost of running an online business wasn't cheap, and is one of the myths that going online is cheaper. That triggered people. Now, one interesting case I can give you is of an international company, headquarters based outside Europe, but with plenty of presence in Europe. They just started implementing the policy they had more firmly. So where it said they couldn't take a return, instead of giving the customer the benefit of the doubt, they put signs on the tills, they trained their staff, and they made it clearer that, with great regret, they couldn't take the return on this case. And just by implementing the policy they had, taking that action based on the increasing rate of returns, they actually managed to save a 7-figure sum in a fairly short space of time. And this is the key point and links back to what John was saying. They don't seem to have lost customers. That's the simplest way of putting it. Or they've lost very few customers by doing that because of the clarity of the message. So I think it doesn't have to be a huge action, but in this particular case, just sticking to the policy you had and enabling the people at the front line to be able to enact that policy was really crucial. And what we're starting to see in the last few weeks are that people are looking at those returns policies and thinking about, well, when can we really afford to give a free return? And I have noticed in a couple of recent reports that actually the number of companies offering completely free returns and completely free deliveries is actually starting to pull back. And I think customers actually, if it's properly communicated, just accept that, because they say, well, actually, probably it was such a good thing. It was too good to last. So again, it comes back to good communications and getting that double whammy between saving cost, but actually enhancing customer experience.
So does that mean that customer expectations are changing, not so much when it comes to the final product when it gets to us, but once the situation starts to normalize, do you think these expectation changes will remain, or do you think people are just going to go back to their old habits? I don't know if your research has told you anything about how that's likely to go.
I think it's a situation we're monitoring. I think I'm torn. Part of me thinks it would be great if people accepted that there had to be changes, and I think they might well. They'll realise that companies really haven't been making that income from the high street. They'll realise that there is a new way of working. On the other hand, I also suspect we may just fall back. One of the interesting articles I read recently was somebody who reviewed the Journal of a Plague Year by Daniel Defoe, written in the 17th century. And he had great hopes that the world was going to change and people would be more accepting. And he said, well, within a few months, everybody went back to what they were doing in the first place. I don't know if we've changed so much. I think it's going to be interesting. I think people will be a little bit more open, and I think it's going to be down again to how well people communicate. Quite often customers will just say, well, they let me do it. That's acceptable. They said I could do it. So it's a case of communicating clearly what is and what isn't possible, I think, in that supply chain.
You mentioned something very interesting about managing expectations, and perhaps this is something that Professor Cullen can talk about. If an organization should really take the lead in managing the expectations to drive these changes for good, let's say an organization decides to reinvent itself, to change its processes from the ground up. We know that to build anything new, you do need to start with the nuts and bolts. But with so many different systems and so many different parts in a supply chain and so many different cross-functional teams working on getting something from A to Z and possibly back to A again, is this reinvention even possible? Can we rebuild the processes that we see today as being under such strain?
I think the answer is yes, and this needs to be done. And picking up on, again, Lisa's comments around the returns process, just give a couple of examples there, again, of companies that we've worked with. I think the key thing is so if you're the retail organization and you're buying goods from, say, Far East, which obviously happens quite a lot, one of the things that we've worked with organizations on is actually looking at that relationship with the supplier in the Far East. And what one particular organization did was very much use a kind of analytical approach to that, where they were actually looking at what the return rates were for particular products. Why were people sending them back? Sometimes customers, you, me, Lisa, send things back because A, we just don't like it, which is allowable within returns processes. But B, it might be that there's a particular problem with the product. And if there's a particular problem with the product, we need the retailer goes back to the manufacturer, the supplier, and actually needs to have a conversation with them. And again, part of that conversation is maybe around processes, about design processes in terms of the manufactured product. And that is a crucial aspect of returns. So what we want to do in one sense is avoid them. And the only way that we will avoid them, possibly, is by actually going back to the original manufacturer, looking at the processes. It may be that sometimes one key issue is that if it's a technological product, that the instructions that go with the product mean that the person buying it can't actually work the product out. And that often can happen. And therefore, we need quick information to determine the reason for return. And if the reason for return is there's absolutely nothing wrong with the product, but actually the person buying it didn't understand the technology and therefore sent it back because they thought it wasn't working, what we need to do is improve the process of the instructions. The instructions may not be particularly good. And that's crucial. So that can be a way of avoiding returns. I think that's one particular aspect. The other thing is as well, through using analytics. I know one particular organisation, again, who we've kind of done work with, and this is in the kind of fast fashion area. The key issue was that people were sending things back, and the organisation itself is actually monitoring this on a daily basis. And the problem was sizing. The size wasn't right. So if it was a size 10, it wasn't really a size 10. So quickly through the use of analytics, they could actually then contact the manufacturer, the buyers could talk with the producers, and they actually needed to do something about that. So that engagement, that collaboration, that relational relationship is quite crucial, and the togetherness means people can do something about it. And I think, that's pretty crucial. So it may be that we need process changes in terms of the logistics. It may be we need process changes in terms of the design. It may be we need process changes in terms of the way that customers are actually getting the information about the product. So I think it's something which is very important, and it's inevitable that this will need to improve. I think the other really interesting thing, some of the workshops that we've actually had with companies in the returns logistics area, is that people are now starting to think much more from a kind of social responsibility perspective. And then one of the last workshops we actually ran with about 50 organisations involving retailers, manufacturers and logistics providers. There was a feeling that this notion of social responsibility may start to make customers, you, me, Lisa, etc., think more about this returns process, think more about what that causes in terms of lorry movements, etc., in terms of the type of material, etc. So, this notion of saving the environment may actually be really important in terms of looking at some of these logistics, some of these supply chain issues in the future. I think it will become much more important.
And I like what you said there about the different ways that we can interpret the changes for good. My original question, will these changes be for good? I was meaning, will they be permanent? But of course, you've now highlighted the fact that you can interpret the phrase for good in a different way. It can mean with a stronger social purpose. In other words, it doesn't mean permanent, but it means better, positive. That use of the word good, I think, is very interesting. You did talk about change, and Professor Lisa Jack, as a finance professional who's worked with suppliers or logistics operations, how would you normally see the best ways of identifying opportunities to help organizations reallocate resources more effectively? Because the supply chain world, in fact, everything is changing around us. So, of course, there are opportunities to do things differently or to do things better. So where would you start looking for the best opportunities to improve things right now?
The improvements are a bit like John said on 2 feet. One is that you can be looking for those opportunities to be more environmentally friendly, more socially responsible. One of the things we saw, for example, during the time of the project, which was the interviews and the observations were conducted over 12 months, were that the security cages in which goods were kept used to be wrapped in plastic. And then one organisation invested to make sure that they didn't have to wrap them in essentially what looks like cling film all the time, and that has an impact on the environment and an overall reduction in cost. There was a return on investment there. So I think there's that side to it. I think the other opportunities just come from continually monitoring your systems. I think in retail and in manufacturing, we see very good systems having what you might call lean forward. In other words, that the buying, the selling, the delivering are all on a just-in-time basis. That's working quite well. When things come back, there's not really a lean return system or a notion of a lean return system. It's somewhat chaotic. And even in other parts of the world, you see some pictures of third-party return centres almost just being mountains of boxes that have to be sorted through. I'm not sure to what extent that's exaggerated, but there's certainly a sense that when it comes to goods coming back, we don't have systems that work very smoothly. So it's really not great moments of enlightenment. It's just that continual work of monitoring, mapping, looking for opportunities, cutting down steps, cutting out the duplication, that good work that's always gone on. But at the same time, having an eye to what we might now call the circular economy, which we did in our report. My colleague, Dr. Regina Fry, did some very good modelling of what a returns system would look like if it was both lean and the people within it engaged in what's now called a circular economy, reusing, renewing, repairing.
Doing more with your cast-offs, I would imagine. John, when we're talking about casting things off, perhaps there are some assumptions that we need to cast off. Perhaps there are some old ways of viewing how a supply chain should work, or what makes supply chains effective, or the tools we use to deliver things from A to Z. Are there any of those assumptions, the old ways that we need to cast off right now and replace with something better?
The COVID-19 situation has highlighted some of the old discussions around just in time and now the term just in case. So this present situation has really highlighted the need to ensure that supply chains are resilient, agile, and I think that the notion of more collaborative relationships is really crucial here, and that the use of transactional relationships can cause real issues. So to me, one of the most important things coming out of this particular pandemic and the impact on supply chains is the need to, whilst accepting the need to manage costs, increase efficiency, we also need to ensure that we've got resilience, we've got agile supply chains. So there needs to, the issues around local sourcing, multi-sourcing. We need to think about more responsible practices. We talked about circular economy. And again, I go back to this notion of collaboration. I mean, there's some fantastic aspects of collaboration around at the moment in terms to try to fight the pandemic. We had examples in the UK of barbers switching from making coats to making medical gowns. The Formula One teams working with manufacturers. This notion of togetherness, so creating value to the end user, to the end, the person using that product. I think this has been a real shock to the system. But interestingly, we can go back 20 years, 15 years, and people were talking about these kind of potential problems in terms of supply chain failure. And I think that people haven't really taken on board some of those issues, and this has been a real shock to the system. So I think the going forward, going beyond disruption, is we need to look at the practices. We need to develop collaborative relational relationships, and we need to work together. And it is a global world. We need to work across countries, but also look at sourcing and ways to source products, and equally ways that we can manage, as we've been talking about, things like product returns. So that would be my one key thing to come out of all of this. And in terms of accounting and finance, that we can actually use accounting and finance skills very much in terms of analytics. How do we highlight certain things? How do we actually bring costs down, but not causing issues in terms of the products that we're making or the supply chains that we're using?
Yeah, that makes sense. And before we discuss some resources that we leave our listeners with, I have a question for Professor Lisa Jack, because Professor Cullen, you've just mentioned accounting principles. Professor Jack, how would we embed the best accounting principles into the processes that we as companies, or even as practitioners working with companies, where would you say that the best accounting principles can be embedded into these supply chain operations in the future?
I think our key observation from our project was to think more imaginatively and to see the returns, for example, as being assets and a source of income. And this comes back to a very simple principle, that you don't just have a cost center here. What you have is at least an income center, or if not a profit center, potentially. And in fact, one of the retailers we worked with, they don't refer to loss management, they always refer to profit enhancement. And I think that's, if you get down to the real basics, it's about not seeing something as just a cost, not seeing the whole situation as just a cost of doing business, but seeing it as an opportunity, and therefore embedding the idea that it's a profit center that needs to be managed right up to the top of the organization. And I think there's a basic management accounting principle here, that it's as much about the relationships and the controls that you have in place as it is about just having checks and balances in place for the numbers. And I would say, if we're getting back to the real principles of accounting, it's that simple.
So let's end with something simple. What's a resource that you would recommend that people listening to this would go out and perhaps be able to download or discover for themselves? And one piece of advice that you would give to help finance professionals working in this sector to go beyond disruption?
I would, of course, recommend our report, which can be freely obtained from the ECR community website. And the report is buy online, return in store, and talks about those challenges very specifically. It's a very nice colour report. And I'll just sneak in as well that my colleague has moved to the University of Southampton, and on Southampton University's website, you will find our product returns research group. A piece of advice, simply that, to repeat what I've just said, start thinking about some of these costs of doing business as potential income generators, and start rethinking the systems around profit centers, not just a cost report.
Thank you. And Professor John Cullen, what's a resource you'd recommend? Because if you were going to point us at the report, we've already got that, and we'll put the link in the show notes. So perhaps one other thing you'd add to that, and then a piece of advice that you would give for finance professionals in this sector.
Again, a resource is that we've got a reverse logistics toolkit if we're talking about returns. And again, that's available on Reverse Logistics Sheffield. So that's available to download. We've also got some other kind of practice type papers, which again we can download as part of this this particular podcast. I think the one you're referring to as well, I wrote something in 2009, which is quite interesting, and it was sponsored by CIMA, and I think that's a useful piece of work. In terms of what I would say, the key tip is that accountants need to engage very closely with the cross-functional teams. Don't work outside of those teams. You need to work with those teams. Supply chain relationships are crucial to business. And if accountants don't engage in that notion of supply chain relationships, they will be missing an opportunity, as Lisa said, to actually enhance profitability, to enhance customer experience. And that would be the key message from me.
Thank you very much. Our guests were Professor Lisa Jack and Professor John Cullen. Our show notes will have links to all the resources they've mentioned, and while we'll have to leave it there, there's obviously plenty more to discover. And if you'd like to do that as a listener, you can open the show notes to this episode really easily. Just click on this episode's info icon in the podcast app on your smartphone or tablet, or you can open the episode in your computer's web browser. People are listening on computers at home. They're rediscovering that old desktop, which they're dusting off, firing up, and they're discovering they can listen to podcasts podcasts on those too. You'll find everything right there. There are 2 other websites we'd recommend that will help you stay ahead of the curve. You can go to aicpastore.com/go-beyond-disruption or cgmastore.com/go-beyond-disruption. You can type in things like retail management returns. You can type in supply chain resilience. You can type in all sorts of stuff that you've heard us talk about. Really, it's up to you. But those are the places to go for courses, webinars, and other professional development resources. So a very useful mix of free and occasionally paid for resources. So go have a browse. Thanks again to our guests. And of course, thank you for listening. If you've enjoyed the episode, go tell someone about it. And tell us what you thought. We'd love to know what you'd like to hear more of or what you'd like to hear us do slightly differently. You can tell us what you think by emailing us using the feedback link in those show notes. And that's it for this week. Episode 108, done and dusted. No returns, please. From our AICPA and CIMA office in the UK, I'm Kyle Hannon, and we will be back soon with more conversations that help you and your profession to go beyond disruption. Till next time, keep healthy and keep listening. Goodbye.
Thanks for listening to this episode of Beyond Disruption, brought to you by the Association of International Certified Professional Accountants. Learn more about today's topic at aicpa-cima.com/disruption. This podcast is designed to provide illustrative information with respect to the subject matter covered and does not represent an official opinion or position of the Association of International Certified Professional Accountants or any of its subsidiaries or affiliates. It is provided with the understanding that the association, its affiliates, and subsidiaries are not engaged in rendering legal, accounting, or other professional services. If such advice or expert assistance is required, the services of a competent professional person should be sought. The association, its subsidiaries, and affiliates make no representations, warranties, or guarantees as to and assume no responsibility for the content or application of the material contained herein and expressly disclaim all liability for such damages arising out of the use of, reference to, or reliance on such material.